Hey everyone, welcome back to the channel. Today we're diving deep into the top 5 millionaire investment strategies that you can start using to build serious wealth. These aren't quick fixes or get-rich-quick schemes, they're strategies that millionaires have used for decades to grow their fortunes steadily and sustainably. If you've ever wondered what sets the wealthy apart from the rest when it comes to investing, stay tuned because we're breaking it all down. Make sure to hit that like button, subscribe if you haven't already, and let's jump right in. The first game changer is developing a long-term mindset with clear, focused goals. Millionaires think in decades, not days. This mindset allows them to ride out market volatility, make thoughtful choices, and avoid being influenced by the short-term noise. Unlike most people who get spooked by market dips, millionaires stay calm because they know their goals. For example, they often aim to create passive income streams, achieve financial freedom, or even build legacy wealth for their families. They know that these goals won't be achieved overnight, so they're committed to consistent, disciplined investing. Even during market downturns, this approach keeps them steady. When the market is shaky, they see opportunity, not risk, because they're focused on the long game. A big part of this mindset is also avoiding unnecessary risks. They don't jump into the latest investment fad or high-risk stock. Instead, they stick with tried and true investments. They understand the power of time in the market, so they don't panic sell or chase trends. Define what wealth means to you and set clear, achievable goals. Ask yourself, what's my financial endgame? When you know why you're investing, it's easier to stay consistent and committed through ups and downs. Our second strategy is diversification, and this one's a big deal. Millionaires know that putting all their money into one asset is a risky move. Instead, they spread it across multiple types of investments. We're talking about a mix of stocks, bonds, real estate, and sometimes alternative assets like cryptocurrency or even collectibles. What makes diversification so powerful is that it reduces the impact of a single investment going wrong. For instance, if the stock market takes a dive, their real estate or bond investments can help balance out the losses. And millionaires don't just diversify by asset type, they also diversify by region. Investing globally protects them from issues tied to one country's economy. They'll also go beyond traditional assets and into alternative investments. Some may invest in private equity, hedge funds, or commodities. This way, they're protected against different kinds of risks, like inflation or currency fluctuations, which can impact their wealth if they're only invested in one area. Even if you're starting small, try to diversify. Instead of putting all your money into one stock or fund, spread it across a few different assets. This way, you protect yourself from downturns and have a more stable path to growth. Real estate is a must-have for most millionaires. Why? Because real estate offers multiple ways to make money: rental income, property appreciation, and tax benefits. Millionaires often start by buying properties they can rent out. This way, they earn consistent cash flow while the property value appreciates over time. Real estate becomes both a source of income and an appreciating asset. One of the biggest advantages of real estate is leverage. By using mortgages, they can buy valuable properties with relatively little money up front. The rental income from these properties often covers the mortgage payments, meaning they're building wealth without putting up all the capital themselves. They can also refinance these properties as they appreciate, pulling out cash to reinvest elsewhere. Millionaires also invest in commercial real estate or properties in areas likely to grow in value. Some even use real estate investment trusts or REITs as a way to gain exposure to real estate without directly owning property. REITs allow them to earn dividends while investing in real estate markets with much smaller amounts of money. It's a flexible option for building a portfolio without needing to manage property yourself. Real estate can be an incredible wealth builder. Look for ways to add it to your portfolio, whether it's through direct ownership, REITs, or eventually expanding into rental properties. Leverage and compounding are the millionaire's best friends. Leverage is all about using borrowed money to buy assets that will grow in value. Millionaires often use leverage strategically, especially in real estate. By taking out a mortgage, they control a valuable property with less cash, meaning they can potentially earn high returns on a smaller initial investment. Compounding, on the other hand, is a long-term growth strategy that millionaires know well. Compounding happens when you reinvest the earnings on your investments. Over time, these reinvested earnings generate their own earnings, creating a snowball effect that can significantly grow your wealth. Let's break it down. Say you invest $10,000 at a 10% annual return. By the end of year 1, you have $11,000. But in year 2, that 10% return is on $11,000, not just $10,000. So you're now earning $1,100 in gains instead of just $1,000. This snowball effect gets bigger each year, and millionaires use this to their advantage by reinvesting dividends, interest, or rental income to let their wealth grow over time. The earlier you start, the more time compounding has to work in your favor. Millionaires understand that compounding is one of the easiest ways to grow wealth, so they take advantage of it in every way possible, letting their money do the work for them. Start small if you need to, but let your earnings build upon each other over time. The sooner you start, the bigger your returns can be, thanks to the power of compounding. Finally, tax-efficient investing. Taxes are one of the biggest expenses for high net worth investors, so they go out of their way to manage them effectively. Millionaires use tax-advantaged accounts like IRAs, 401ks, or Roth IRAs to grow their money with minimal tax impact. These accounts let them save on taxes now or defer taxes until retirement, depending on the account type. Another smart move? Long-term capital gains. By holding onto their investments for over a year, they pay a lower tax rate on gains. For short-term gains, the tax rate can be nearly double, so they're careful about which assets they sell and when. Millionaires also practice tax loss harvesting, where they sell underperforming assets at a loss to offset gains from other investments. This reduces their taxable income, saving them potentially thousands each year. These strategies might seem small, but when you're growing wealth, every bit counts. Learn about tax-efficient strategies and use tax-advantaged accounts when possible. Even small tax savings can add up over time, so don't overlook this critical piece of the wealth-building puzzle. Alright, let's recap. Millionaires build their wealth with a long-term mindset by diversifying across asset classes, investing in real estate, using leverage and compounding to grow wealth, and through tax-efficient investing. The good news is that anyone can start using these strategies, even if you're starting small. So, set your goals, start where you are, and let time and smart choices do the rest. Thanks so much for watching. If you enjoyed this breakdown, hit that like button, subscribe for more finance content, and drop a comment on which of these strategies you're excited to try out. See you next time, and remember, wealth building is a marathon, not a sprint.